I've been investing for over 10 years now. And within that time frame, my investment portfolio and strategy has changed quite a lot. And I want to share that with you today. Hello everyone, my name is Zach and welcome to On Cash Flow, where I help you become a master of your own cash flow. Now let's get started. Okay, so here are the years where my portfolio changed dramatically, because over this period of 10 years, I have learned a lot, and therefore I had to make a few changes. So the years are 2013, again in 2013, 2015, 2020, and most recently in 2022. Let's go all the way back to 2013. That is 10 years ago when I first started investing. And the first thing that I actually invested in was a stock, individual stock, that I was familiar with, because that was the kind of first thing that I read about. And that stock was JCPenney. In 2013, when I was first investing in it, I saw that it was down. And I thought, hey, I think this stock will recover. I think it's a long-lasting company. And so that was my reasoning for investing into JCPenney. That was the first individual stock that I bought. That was the first investment that I bought. And my primary strategy at the time was more of, hey, I'm going to buy this at this price, and then when it increases, I'm just going to sell it. I didn't have a buy and hold mentality. I didn't have a long-term mindset. So I held that stock for, I think, just over a month. And then it was worth more than what I had paid for it. And at that time, I sold it and made a very tiny profit. And even though that wasn't really a good investment strategy, that was the beginning of me getting really interested in investing and building wealth. The funny part is actually in more recent times, in 2020, when JCPenney became no longer publicly traded, all these shares were bought up and now it is privately owned. So it is no longer an individual stock that you can realistically invest in. So it's a good thing that I did sell when I did. It's a good thing that I didn't have a buy and hold mindset when it came to that individual stock, because it would not have turned out to be a very good investment. And speaking of investing, I want to know if you've seen my full guide to investing your way to financial independence. If not, I'll remind you again and point you to that video at the end of this video. But getting back to the second major change to my portfolio, after I sold that individual stock again in 2013, I switched my primary investing strategy to one that involved mutual funds, because here I was getting more into the weeds, learning about how to invest, and more specifically, I learned about diversification. So the first mutual fund that I actually purchased in 2013 was FMILX. And I purchased FMILX because at the time it was performing very, very well. As we all may know, just because something has performed good in the past doesn't mean necessarily that it's going to perform good in the future. However, when I was first investing in this mutual fund, I was looking at, hey, what is top performing right now? So FMILX, the Fidelity fund, was performing very well at the time. And so that is the first mutual fund that I invested in. It is an actively managed mutual fund. And if you know anything about my current philosophy on investing, I prefer to do index funds that are not actively managed, but this one was actively managed. And currently the management fee for this fund was 0.61%. Now there are certainly much higher management fees out there, but 0.61% is still a lot compared to your typical index fund. Right now, my primary mutual fund investment is going to be VTI, which is Vanguard's total stock market index fund, but that fund's management fee is only 0.04%. So compared to 0.61%, there's a huge difference there. In fact, it costs 15 times less in fees to own VTI than it does FMILX. And as I was putting this video together, I actually did get curious and I looked into FMILX to see how it has been doing over the years, because, well, I don't own it currently now, but at the time when I did buy it, like, how has it done since then? And it's actually performed quite well. So if I would have stayed with FMILX, I still would have been doing pretty decently today. And right here, I want to show you how FMILX has been doing compared to a total stock market index fund. So you can see that the blue line is FMILX and the orange line is the total stock market index. So if I were to still be invested in it today, it wouldn't be all that bad compared to my first investment of JCPenney, an individual stock that is now privately owned. Now let's move on to the next major change I made to my investment portfolio. I wasn't exactly able to pinpoint when I switched from the actively managed mutual fund to index funds. However, I was able to pinpoint that in 2015 was the first time that I diversified into international stocks, more specifically an international index fund. In 2015, I invested in a Fidelity version of VXUS, which is a total international index fund by Vanguard, but I was invested in the Fidelity version in 2015. At this point in my investing career, I was further down the line of diversification, and I understood that I think that international diversification would benefit me in some way, so I did allocate some money to international index funds instead of exclusively staying with a total stock market US index fund. I believe at this point I discovered the Bogleheads forum, and in there I learned about the total world index fund, or just investing in the total world, whatever the world asset allocation has to be to invest in that. However, I wasn't ready to exactly take that leap, so I did compromise by investing less in international funds, but still having some in my portfolio. Because if you were to follow the total world stock market index, it would be somewhere around 60% US and 40% international. And that would be market cap weighted globally. I decided to instead stick with something more of an 80-20 split, 80% US funds and 20% international funds. And that still holds true today. That's the split that I am going for today as well. Now, really quick, I just want to say I do put a lot of research and effort into making these videos. So I would really appreciate it if you could just take one quick second and hit the like button on this video. It really does help me out, and I would really appreciate that. Okay, now getting back into it. In 2020, something very crazy did happen. And I actually made a pretty dramatic move in 2020 because I took advantage of what the stock market was doing at the time. What I did in 2020 was I actually allocated to 100% stocks. Something that I think I just forgot to mention was I did have about 20% of my portfolio in bonds at some point in the early 2014, 2015 time. However, in 2020, I decided to go 100% stocks, and I am currently still 100% stocks when it comes to stocks versus bonds. Now, I just want to say that I did not necessarily plan on doing this. I did not 100% plan on saying I'm going to go 100% stocks. It kind of just happened because I took advantage of what was happening in the market. So at the time in 2020, stocks hit a very, very steep decline in a very short amount of time. So I think it was around a 34% drop from where it was at the previous highs. So they dropped about 34%. And then I think at the time, the bonds were up pretty significantly as well, because a lot of people were shifting from stock into bonds, into a safer asset. And so my bond portfolio portion was up quite dramatically in a short amount of time. And my stock portfolio allocation was quite down dramatically. And at that time, I said, I'm going to rebalance into stocks because I don't think that there's any reason why the stocks would not go up. I did kind of get lucky on the time frame of when those stocks recovered, right? It was a very steep recovery from that 34% drop. And so I reallocated my 20% of my bonds into stocks and basically bought them all up on sale because my bonds were high and my stocks were low, and I reallocated to those stocks. And then I actually did benefit greatly in terms of what my wealth numbers were afterwards, just shortly afterwards when that recovery did happen. But enough about me and my portfolio. This leads me to the big question here. I want to know from you in the comments below. Have you ever made any radical changes or any big changes to your investment portfolio, maybe to your asset allocation or to your primary strategy? Please let me know in the comments below. I really want to hear what you have to say. But I do have one really good one for you here. One other dramatic change I made to my portfolio, and this was in 2022. In 2022, I bought my first rental real estate. So I actually did invest in something other than stocks and bonds, something other than paper assets. And yes, we are talking about physical real estate here. This was the first time that I bought real estate as a means of an investment. And the purchase price that I made for this rental property was $137,000. We then had a renovation budget of around $25,000 that we spent on renovating this house. And this included finishing out the basement that was in this house. So it was a relatively small house, but it had an unfinished basement. So we put $25,000, we finished up the basement and put a bathroom in the basement as well. So basically turning a 2-bedroom, 1-bath house into a 3-bedroom, 2-bath house, and basically doubling the square footage as well. So after that was done, we had the property reappraised, and it reappraised for $186,000. So it went from $137,000 when we purchased it to around $186,000 for the after repair appraisal. And then we went ahead and refinanced based on that $186,000. So we were able to basically get most of our money back that we put into the renovation and the closing costs and all that. And it was a lot of work, to say the least, but I was so glad that I actually did do it. It did feel like a great accomplishment getting invested in rental real estate, because I honestly never thought that I would get invested in it, because I've been invested in stocks and paper assets for so long, and it still is my favorite thing to do. But the major point I want to make here in this video is that my investment portfolio is not perfect. Far from it. No one's investment portfolio is going to be perfect, because we don't know what the future is exactly going to be like. We don't know what these investments are going to return, right? We all are just making educated guesses here. And along my journey, my 10 years of investing and becoming financially independent on some kind of level, I have learned a lot, and I've made a lot of mistakes, and I want to hopefully help you not make the same mistakes that I did, and hopefully get to financial independence and early retirement or regular retirement, whatever your goals are, in a way that is a lot more smooth. And one way I think that I can help you do that is by letting you watch my complete guide to investing your way to financial independence. If you haven't watched that video already, you definitely need to watch that video, okay? It's gonna pop up on the screen somewhere around here after I get off the screen. Thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time. Although because it is actually quite, I believe it was at this point where I discovered the bogle. What do you call it?